Alright, you guys already know what it is. It is one of my favorite series that I do on the channel, which is the subscriber portfolio reviews that I do of my subscribers, peers in the investing community, other content creators, and so much more. And today, we have a good one. He's a real man's investor, and he's none other than the Dividend Prophet, Matt. So today, I'll have the pleasure of going over his portfolio, and just because he's a real man's investor does not mean that I'm not going to go hard on him and share my honest, unfiltered thoughts. Also, I have a few of these, so if you do submit your portfolio in, there might be a bit of a delay, but I'm going to try to pump out one every week. And since Matt is a real man's investor, he'll need the real man's investing shirt from the Do Dividend Stocks.drugs merchandise. The link's in the description. Thank you all, and roll the intro.
Hello, I like money.
If you guys are familiar with this series, you guys would know that before I looking at all the holdings and get my thoughts on the stocks, I like to know the investor's age, objective, goals, all that good stuff, because what I may like in my dividend stocks and companies that I invest in, some people may be investing for dividend income, some for growth, some for dividend growth, so we gotta obviously have some context. Matt is a dividend growth focused investor. He's also in his 20s and he is a first responder, so that's why you guys should all go follow him on Twitter. And since he is a first responder, he does get the discount from Starbucks, I am pretty sure, so that is definitely a benefit. Matt recently started investing too, and he's learned a lot along the way, and I'm very proud of how much he's grown. He is active in the Discord, link in the description. But to start off, Matt currently has a portfolio size of $14,210, and out of that, $1,500 is cash. And I think that's a very solid percentage. It's about 10% cash right now if I did the calculation correct. But if you guys are active on the Discord and follow him on Twitter, you guys would know that he has been buying up a lot of stocks recently. But to start the party off, we have 6.03% of his portfolio in VU. He has 15.37% of his portfolio in SHD. Now, he did mention here that he is overweight in SHD due to the run-up, and he bought at a pretty decent time. Now, I'll say this, I think right now would be the more opportune time to possibly trim your SHD and move it into VU, or just really kind of average it out. I think SHD is honestly a solid ETF for him, especially considering that he's looking to live off the dividends at some point. He could probably split that SHD and VU, to be honest, 10%, 10%. I think that'd be a solid way to go, definitely when it comes to the ETF side of things. SHD, you guys would know, has a huge portfolio rebalance coming up this March, and I'm very interested to see how it goes. SHD has been performing well recently, as some of its stocks like Ford and AbbVie have been doing very well, along with Home Depot. In my portfolio, currently SHD makes up 8 to 9% at my current valuation, and I'm currently just holding it, to be honest. I'm planning to buy VU or SPY in a retirement account, that's why I don't have it in my portfolio personally, but I do like the idea of VU. His largest position in the portfolio is currently Celsius, sitting at 13.84%. Now, you have some people like Blosef Carlson who think that we're in a caffeine bubble, which I think is absolutely...
That's absolutely fucking ridiculous.
Caffeine is the most addictive drug in the world, and it's legal, and it's not going anywhere. But I will say this with Celsius, and this is the reason I prefer Starbucks over Celsius as a quote-unquote caffeine play. I think Celsius is a lot more trendy drink, where Starbucks has really been around for, decades. Now, I will say this as well, I don't drink energy drinks personally, so I don't really understand from a consumer's perspective the really buzz around it, so I think that is one thing to take into account, and that I think kind of takes away from my point. But me personally, there's just not a lot of historical data to prove that maybe Celsius isn't a trend, or that it's here to stay. I really like what they've been doing recently, especially with like athletes and influencers, but me personally, from a consumer perspective, I just don't fully understand the craze about it, and there's not a lot of historical data backing up the brand. So me personally, I don't love this holding, but I think it is a really interesting holding. You do a lot worse than this. Next, he has Google, making up 9.64% of the portfolio. Google recently just went on a dip. I really like Google as a company. I think their free cash flow is impeccable. I was actually really close to buying Google back when it was dipping in last fall at $106, and I actually had my finger near the buy button. I didn't go through with it. I regret that now. At least I got in on the cloud buzz with Microsoft, but still, that one kind of stings. But I really like Google, especially as a core holding. Speaking of cloud, his next holding is Microsoft, which makes up 6.96% of the portfolio. Microsoft is the best company in the world, and that's not a debate in my opinion. Whether it be their amazing video game business, which I believe could be a monopoly over the gaming industry one day, their new AI business segment that they've had recently, or the amazing cloud business that I initially invested in, Microsoft is such an amazing company. Microsoft not only buys back shares, but they're an amazing dividend growth stock as well. And recently, they've been hitting all-time highs near $400. Now, if you would have asked me when I was buying at $230 and $240 if they'd be trading at $400 today, I would probably say no. But That just shows why you can't time the market and why you gotta always buy amazing businesses. And that's a philosophy I feel like I need to practice like I preach more. Microsoft just recently reported an amazing earnings once again. I'll say this, Microsoft's the best company in the world. Satya Nadella is a genius, and maybe they'll be the next big AI company, but you never know. I will say this though, I would like to see you build up that Microsoft position to maybe 10 to 12%. I think it's appropriate. I understand if you think it's trading at ridiculous valuation right now though. I didn't even think it would be up here, but I think if it ever went back down to like 370, 360, 350, definitely consider dollar cost averaging, and again, that's probably what I would do. The next holding is Vici Property, stock ticker VICI, sitting at 10.67% of the portfolio. Vici is going to be raking in dough this year from rent. This weekend, the Super Bowl will be held in Vegas, and Vegas is not going anywhere. It's one of the biggest tourist destinations in the entire world. It's a growing city with a growing population. I've been buying a whole lot of Vici so far this year, and have really built it up as one of the core positions in my portfolio, and I plan to continue doing so. I like this holding a lot, and if you aren't on the Discord already, you would know about the Vici cult. But at the end of the day, Vici offers immaculate growth when it comes to a REIT and really quality dividend yield, sitting around 5% right now. I love this holding. Next is Apple, which makes up 6.05% of the portfolio. Apple's been in the headlines a lot recently for their Vision Pro headset. This just shows what kind of brand value that not only Apple has, but the amount of innovation that they have in their leadership and really team. I love this holding, and I'd love to see you build it up to 10% of the portfolio. Next, he has Visa, making up 4.27% of the portfolio. This is another company, I think it's one of the best companies in the world, a top 3 holding of mine for sure. I will say this, I would like to see you build that up for sure. If you actually watch one of my Visa videos a few weeks ago, I actually went over like the price to earnings, and I think I made an argument for why it could be considered fair value even at these all-time high prices. If you look at their price to earnings and price to free cash flow, they're actually cheaper now than what they were $220 a few years ago. That's all correlation to their earnings because they grow them so well. I'd love to see this be a 10 to 12% holding in the portfolio as well. Next, he has Home Depot. Home Depot is a company he's tried to convince me to buy, and it makes up 8.26% of the portfolio. I've done my research on Home Depot. I really like it. I'm going to add it eventually. I like it better than Lowe's due to the consistency of the free cash flow. But unfortunately, Home Depot, like every other stock this year, has really gone up like crazy. And if I ever got it near 320 or 310 again, I'd probably enter and start my position there. But Home Depot is definitely on my watch list. Next, here we go. He has Starbucks, which makes up 8.88% of the portfolio. I love Starbucks. I have a whole playlist on Starbucks. Such an amazing company, secret bank, convincing CEO, and addictive product. That's all I gotta say. Next, he has Costco, which makes up 7.19% of the portfolio, and I'm sure he is relishing in all these gains right now. Costco is such a great company, but unfortunately, the only thing bad about it is its valuation. I actually just recently ran a Twitter poll on my Twitter at Ryan Dengler Show, asking people if Costco would ever dip again, and about half the people said no. Costco's an awesome company, but the valuation doesn't seem to be awesome. But that's what people have been saying forever, and it just continues to go up. And lastly in the portfolio, he has Waste Management, which is his smallest holding at 2.85%. Waste Management, I'm sure the issue with him here is valuation. It's a great company, sustainable, quality growth, but once again, you don't want to pay a 27p for a garbage company with limited growth ahead of it. Matt's portfolio is honestly one of the better ones that I've ever gone over on the channel. It is just the right amount of holdings. There are no crazy holdings except really Celsius that I'd want to get rid of. They're all really strong businesses that produce consistent free cash flows. I really like this portfolio a lot. And he owns Starbucks. If there's one stock I want him to add, of course it's Target. But in all seriousness, thank you to Matt for sending in his portfolio. If you want to talk to Matt in real time, join the Discord link in the description and follow him on Twitter. Thank you guys for watching. Do dividends, stocks, not drugs, and have a good one.